All right. Good morning, everybody. Man, it feels like a Monday. It's just the way it is, huh? Green on the screen. Hong Kong up 4.5%. 4.5%. Just wow numbers. UK up 1%. NASDAQ near 0.5%. Even the small caps are up 0.5%, which kind of leads into that dash for trash, penny stock rally, left for dead, coming back to life stuff that we had, say, the first of the year. And Japan basically flat. It's retail today. Target. And tomorrow is Walmart. I think Macy's, a couple others. The PPI is not expected to be as explosive as a CPI. It doesn't mean that it can't give us a little volatility, but it doesn't have that kind of history. Retail sales, on the other hand, are a really big deal. Definitely want to keep track of this today, 8:30. So we can see on the impact scale that retail sales comes in pretty high on the list as something to be aware of. A lot of data coming out of Japan tonight is going to be particularly important as well. That kind of comes back to know what you're holding. Eight 30, 10, 10:30. That gets us into the evening. Do have a couple of Fed speakers out chipping their teeth different times today. I think there's Barr is going to be speaking, and then later in the afternoon, Bank of England, and then Barkin. So we had a discussion a while back about this downtrend that we had been in and how it matched everything for a topping pattern, pure price method, and that we had a confirmed trend to the downside, especially when we look at things on a daily chart, right? All the levels had been met. Every pullback did what a pullback was supposed to do. We broke each key level and we continued to the downside. And then we rallied up and we had the discussion when we were right here that we needed to get through this zone and we had to get above all of it. If we failed to do that, then this was nothing more than a really strong pullback before the continuation to the downside. We can see here, just textbook perfect, lower lows and lower highs all the way down, right? So this had to give a higher high. Otherwise, we were going to continue. And we now have that. Even if we were to fall now and drop all the way back down and close by the end of the week below 4,400, the wick has been set that high, right? So either way, we have achieved this target that we needed to achieve if we're going to start turning all of this around and heading back in the other direction. We do have another data point that needs to be taken out, and that's through this zone here, that 45.50 area. Since we've cut down through it, we have not managed to get back above it. So it's what we're working on right now. The expectation is that there's unfinished business there. $45.57, call it $45.58, maybe. Consider it as a zone, not just a single line in the sand. So far, so good, but we need to keep it. We can get weak. We can fade back as long as we close above, say, the 11.16 candle. Let's just do it this way. As long as we close above this line, then this drive up off of the lows can still continue. So we'll just continue to lean on that. And the halfback, 43.78. So far, everything is looking really good. And we've got kind of that rising tide scenario, right? Where everything is participating. Looking at it from growth versus value, we had a pretty significant breakout. I mean, that's pretty fantastic, right? Think about the first of the year, January 2023, and the just absolutely amazing run that we had through the first part of the year. Kind of stalled out until they saved the banks, and then we had the AI explosion, and we've been sitting kind of stagnant, you know, since June, just chopping about here. Well, this is kind of that indication, right, that we're looking for a continuation into the end of the year, kind of that Santa Claus rally concept. So volume is strong today, came in at 120. They're not hedging. We don't see any market maker move. We have an MDP, that's a missed daily pivot. And, you know, we didn't have one yesterday just because of the volatility wicked us down through there at 8:30. But if it hadn't have been for that, we'd have had a missed daily pivot yesterday. And really, I thought about this quite a bit. Would we still count that as a missed daily pivot, or do we have to remain so technical as to say, nope, it was touched, it's not a missed daily pivot anymore? I tend to lean towards the concept of the missed daily pivot rather than the letter of the law in this case. It's the concept of what avoiding the pivot stands for, right? If you've gone through any of that stuff that I've recommended before about just going out and looking at Knox and checking out the missed daily pivot concept, I'm more inclined to put this into the camp of a missed pivot, because we're not dealing with flows and, you know, sustainability levels and missed opportunities, unfinished business. It's not really that, right? If it was, then there'd be a completely different conversation. So if we count this as a missed daily pivot, then we've got two in a row. And so far we've got today. Today technically doesn't count though, right? We have to get through the end of the day before we would say today's a missed daily pivot. We are getting overextended from the weekly pivot point. I don't have a line in the sand that says too far. There's just this concept of how far away from the weekly pivot point are we? And when it's a considerable distance, then you have to, be aware that buying into buying, has limited rate of return at that point. It starts to come down to the what's more likely. After having already made a significant run to the upside, what's more likely? That we're going to yet again make another big sustainable move to the upside, or that we pull back and perhaps come back the other direction, or that we just chop about sideways, right? Because it doesn't owe us anything. We're 2.8% from the weekly pivot point. That's about as far as we'd want it to go. Maybe 3% at the worst. We don't have anything on the profile here. No classic shape. Really just nothing. Massive air pocket. If we happen to break through 4,500, then we're very likely going to go down and close that CPI liquidity gap. That take us down to 44.25 pretty fast. We punched through that VPOC yesterday, although there was a minor first touch play and then it was retested from the other side. Not much of a surprise. It was at a key level, round number. So, yeah, we don't really need to carry forward yesterday as a VPOC because we've come down and tested that level multiple times in the overnight. So it's not a VPOC anymore. It's just a POC. And this does kind of imply that they've gotten their work done for the day. If we were looking for a narrow IB, we don't exactly have it. The Globex range is just a little shy of 0.5%. It's not too bad, really, in the grand scheme of things. We're inside day breakout. We've managed to break outside of yesterday's range. Little Captain Obvious there. The key, though, is whether or not we're going to keep it. So it doesn't owe us anything. We're not seeing any threat out of the dollar. It's holding below that 104.5. That's kind of my line in the sand right now. As long as we're staying below 104.5, really don't see anything that's going to deliberately weigh this market down and hold us back. So we're not looking for weakness in the S&P or weakness in the NASDAQ as long as that dollar's below that 104.5. Now that's a swag level, right? It's not, there's nothing that I could point to and say, well, I got this number because I measured this and calculated that, right? It's just swag it. SWAG. Yeah. So ZB, we're starting to get this little bit of a disconnect. Yesterday, we had stocks and bonds both moving in the same direction, up. We had that nice, strong continuation through the day yesterday. But we started to break that apart in the bonds. And now we are divergent here. We've got bonds headed to the downside and stocks headed to the upside. That's not necessarily a bad thing, right? So with this divergence between the stocks and bonds, it kind of gets us back into the old days when we actually had some form of risk parity, right? The disconnect or the trouble here is that when we use things like the 10-year and we use things like the Dixie and US dollar Japan as a gauge for whether or not we should be seeing the S&P and the NASDAQ rise. Well, with the bonds falling, the 10-year is rising. So now we've got the 10-year rising and we've got stocks rising, generically speaking. So it kind of throws a curveball into stuff. right? And what we don't really have is the dollar rising. So the question about when does a weak dollar imply a weak market, that would be a completely different concept, right? When you think about the dollar, this isn't really the dollar. This is the dollar index. It's got Europe in it, China in it. It's like an ETF of nations around the world, right? It's not, quote, the dollar. So that kind of question about a weak dollar and a weak market would take you back to like economics 101 and looking at something, say, like UUP, which is the dollar, or a better representation of the dollar. When it comes to the DXY, using that kind of approach from that kind of question, you'd want to be able to ascertain or answer, why is it rising or why is it falling? Back in what, 2020, maybe it was 2021, when China was restricting its citizens from participating in the markets, it was like a weight against rich people. Basically, they were screwing around like China does, trying to impose different sorts of restrictions and controls. There was a flood of Chinese money coming over to the US and getting into US tech stock companies. Well, that conversion, right? We've seen the DXY rising and we've seen tech rising, and it was just this runaway dollar ripping, tech ripping, market ripping, all to the upside. And when that stopped and the DXY would fall, so would the market. And it was a completely different relationship for a completely different reason, right? So if you're looking at the DXY and it's going up or it's going down, getting the why behind it will help you be able to answer that question. When is a weak dollar offer an implication of a weak market? When the reason for the dollar going down would be the same kind of reason for the S&P to go down. Bad economics, bad US sales, bad earnings. Looking at the NY Fang from yesterday, there was a little bit of a tell. Now this thing, if you're not used to using it, it always makes the gap down or the gap up immediate, right? It's just this is nothing more than a math formula. So it doesn't have any activity in the overnight, and at the open it just immediately recalibrates to its new position. And so it has this kind of a visual gap up or gap down. That's just the way that it functions, right? So it's easy to kind of get lulled into this idea of a big gap up or a big gap down. But a lot of times that's all that it is. It's just a recalibration. So yesterday it recalibrated, basically, big gap up, but then it spent more than half of the day really not doing anything. And what I found myself doing a lot yesterday was just removing that first 5-minute candle, or in this case, a 2-minute candle, the open candle. And once you did that, what you had was a stagnant sideways NY Fang for really a large part of the day. Where's the rally, right? Where's the strength? Where's the big blowout, rip your face off, flows? Not here. So we did have a lot of stuff moving around yesterday. Some quant levels, we had massive market breadth through the advancing versus the declining issues, almost triggered the alpha protocols more than once. NASDAQ 100 had 97 out of 100 names moving to the upside more than once yesterday, right? So really close to the protocol levels. We even went into the close yesterday with 95 out of 100 names in the NASDAQ advancing. Now, to be fair, it doesn't mean that they were ticking up, right? An quote, advance minus decline is looking at anything that is up on the day above its previous day's close and or up on the day above its own open. Depends on, which broker you're using for the advanced decline rules or dynamics. But either way, what it doesn't mean is how many companies are ticking up right this moment. It's just how many are, quote, advancing on the day. So going into the close with 95 out of 100, it sounds great. But if they had already had a big blowout move to begin with, and then they just held the line for the rest of the day, or even faded back on the day, but didn't fade back enough to get the gap closed, then it was still considered, quote, advancing, even if it fell for the rest of the day. So you got to kind of take that with a little bit of weight behind it, right? You got to kind of go through those 100 names, which is where a heat map really comes in handy, rather than trying to cycle through a watch list or go to each individual chart and just look at that heat map and see the same 100 names. The cumulative tick was really just spot on perfect yesterday. It never led us astray, continued to point correctly to the upside, even stalled out nicely through the midday. And I point this out because there's times where our tools just don't work, right? They're just all out of sorts and they're useless and we just have to set them aside. But when they work, then, we want to continue to use them as long as they're working. With this disconnect that we have right now, where we've got bonds falling, yields rising, and the 10-year rising with stocks, then we're going to need something else, right? We're going to need a little bit of help. And remember, it's not tick for tick. So sure, right now, the 10-year is falling. We got a red candle while we've got a green one on the NASDAQ and a green one on the S&P. But the 10-year is up on the session, right? Consider where we opened in Globex. It's up 0.86%. The NASDAQ's up 0.7%. The S&P is up 0.5%. So these are up together. Something's got to change today. And if it doesn't change, it's just going to be a really weird, janky kind of day, right? Like that word, huh? Janky. It's sketchy, bro. It's just all there is to it. So we'll take what we can get. My benchmark for what is moving on the day is 0.5%. If things aren't up at least 0.5%, then I don't even like to consider them. I'm generous in that regard. I know a lot of analysts that use 1%. The reason that I use a half is one, we start the briefings so early in the morning. A lot of other analysts that I know start later in the morning, sometime after 8, 8:30, even closer to 9 o'clock. And so that 1% benchmark works for them, partly because of the time frame. But two, it works good if you've just got a lot of names or a lot of industries and sectors and groups that are all up this morning, like we have in our morning today. That there's times where it might benefit you to increase that benchmark a little bit. If you look at everything that we've got this morning that's doing good, or that meets our qualifications for that 0.5%, even giving it a little, like I tend to do, 1 or 2 percentage points doesn't really, turn me away much, then all of these meet our benchmark. Well, that's just basically saying, okay, well, everything's up. Everything's up. I need to narrow that down a little bit, right? If you haven't heard this concept before, the idea behind getting everything together in the mornings is that you've got all of these markets, all of these different markets, and you're trying to funnel everything down into some tradable activity by the time we get into the 9:30 open. So how do we go from all of these markets to just these little bitty 2 or 3 names, right? Because by the time you get into the 9:30 open and you're ready to put money on the line, you don't want to still have 10 or 20 names that you're trying to monitor all at once, right? You're not going to trade all 20 of those names unless you're running some kind of protocol play. So we need to filter everything down, right? We need to slowly whittle away from that massive list down to just these 2 or 3 tradable opportunities. Well, one way that you can start to do that is by changing your benchmark in the morning for how far a market has moved before you consider it. And 0.5% works a lot. But if you got a ton of names and you're beginning to get a little overwhelmed by how many things are on that list, bump it up to 1%. If that still doesn't narrow down your field, take it up even more aggressive, get to 1.5%. If we were to use 1.5% today, we would still have four different things to focus on. The China ADRs today, especially when we seen that Hong Kong was up so strongly this morning, the China ADRs, BABA, Baidu, JD, PDD, maybe even NEO and Lee. That's going to be a big focus. Right behind that, Bitcoin names, HUT, Hive, Mara, Riot, MSTR, all those Bitcoin proxies, including semiconductors, right? Because remember, when we ripped apart Tasty Trade's Smalls Exchange Bitcoin product, it had a lot of semiconductors in there. I just watched a webinar on TrendSpider the other day because they're coming out with so much new stuff that they were doing a webinar. They got AI started to get built into this thing so that now you can code it using plain English and the AI will convert it for you into their code so that you can build the scanners and stuff. I love it. These guys are always innovating and coming up with new stuff, and they're really close to getting this to where you can trade from here, from TrendSpider. It's not out yet, but it's really close. That's fantastic. Anyways, so we don't have marijuana this morning. The MJ is down. Got to be careful with that one though, because it doesn't always get flows in the AM, but it went into the after hours with flows, so then it's still reading, an after hours print. That's not what happened this morning, but you always want to check. Same thing with cloud computing. This thing often won't get pre-market flows, but it'll have after hours flows, and so it's always good to check to see if what it's reading came from this morning or came from last night. Here's the cryptos list that I was referencing a few minutes ago. And as you can see, it's got semiconductors in there and some odd things that you wouldn't think of when it comes to blockchain and crypto. Things like PayPal, NVIDIA, AMD, Taiwan Semiconductors, Square. To me, those aren't the names that come to mind, right? When someone says blockchain and crypto, I'm not thinking, ooh, Square. But we don't have to fight this list, right? This is all we did is open up a product and see what it was made out of, and these are the names that were found inside that product. If we are going to start to see this dash for trash, left for dead, penny stock junk begin to rally back up, right? Some bottom fishing things underneath their 200 that are coming back to life, then a lot of these crypto names are going to fit into that category. I don't have moving averages on this daily chart, but just looking at the fall from earlier in the year, you'd have to consider the idea that we're very likely underneath all the major moving averages. Now you take MSTR, the other way around here. This has just been a continued rip to the upside, breaking through this structural resistance. Just got a Busby off of it the other day. Now we're holding right in the middle of this really big candle. So, massive indecision here. The gap is closed, however, so there is that. Square's looking really good. And PayPal, I still think this is going to be a Phoenix, but we'll see. So on things that are up the most, those China ADRs and the Bitcoin proxies are topping that list. You can see that there's just a massive amount of names in that China ADRs list. It's a really big list, but it's not hard to focus on things that, just kind of float to the surface. There's stronger names like JD and PDD, Baba, even Futu, as weird as this one is. So if you're looking for some day trade focus today, that would be the two places that I would start. Finance did really good yesterday, but that's kind of a broad sentence, right? Just to say finance. KRE, for an example, the regional banks did really good. I tend to break those down into their groups. So we know that KRE is the ETF that we're talking about. And as an ETF, you can break things open. These are the top holdings inside of the KRE. And those don't really do it for me, right? A lot of these aren't very liquid, when you start thinking about their options and whether or not they're good options. No, most of these don't have, great options. So then that takes us to wanting to find something else. Use something a little more generic like XLF, the financials. This has a mixed bag, right? It's got insurance in it, trading firms, things like that. So we can see, Schwab, Citigroup, American Express, but some of the biggest names in here, JP Morgan, Visa, MasterCard, and then things that I like, Bank of America, Wells Fargo. Those two are always really great products to trade. Reasonably decent liquidity in their options. Their stock price, isn't $300 to $500. So even smaller accounts can trade the shares, can trade the options. So we've got some opportunities. The idea at this point is going to be whether or not we can keep it. So looking at Wells Fargo, for an example, we had that breakout. And what we often see after getting a trend line breakover like that is a little bit of a Busby, where it pulled back and retested it from above rather than from below. But it still needs to follow through. We've got a good start on the week. But if we look at this wick structure back here, still dominating, still trying to project the idea of unfinished business, there could still be a massive wall of sellers sitting up here, and we just don't know if they're done yet. So we have to watch the flows to be able to answer that question better. It's been a long, boring range, right, for a year and a half that we've been sitting in this zone between 37.5 and 47.5, and we're just not done yet. For a while, we were running legged in iron condors, like a zero risk spread play. Gotta love zero risk. I don't see I don't see it as favorable as I did, though. Kind of looking for this to end. So right now the goal is just to say run it back up into the high 40s, 45, 47, and then we'll renegotiate that top. I am on a weekly though, so when we put it on a daily, it starts to get a lot spottier. Big gaps, crazy turnarounds. So you can see now that 42.5 becomes an area of concern. If we do manage to get through that though, then we'll focus on say 43.5, 44. Let's just this area back here, right? This kind of going to be what we want to aim for. Put a half back level on it. See, it makes a little bit more sense, that 42.81 half back. Whether or not we can get there, A, and then B, get through there, it's a different story. But this tends to be a reasonably decent day tradable and short term trade product. XLF is near that 0.5% this morning. So, it does fit. We could see KRE though, those regional banks that I mentioned earlier, up nearly 1% this morning. So Nat Gas up to more than 2.5% this morning. This one's had a bit of a hard time, right? It's been a bit of a struggle to keep it. And the spot has been a better chart. This is XNG USD, natural gas spot price. Makes for a much better charting product. We had this multi-year wedge that we were focused on. Something a bit like that. So we had this big breakout back at the 1st of October, and then it just stalled out, and it's been slowly kind of building out into a megaphone pattern. Remember, liquidity resides on the other side of the pivot. So after we set the pivot here, we kept going just a little bit higher. We had the 50% marked for a long time, but it finally broke that. If we were to, capture the 50% level of this big candle, broke through it. Now we're struggling to get back above it. There's a discussion on nat gas, that it's a weather product. So, when we have warmer weather and we're not having, a stressed winter, then this probably isn't going to do that great. So we had a good start, nice breakout, and then it just stalled out. This has been a trade that, a lot of people have focused on for quite a bit earlier in the year, after such a substantial fall to the downside with that kind of a classic Wyckoff look to it. It was like, oh, yeah, let's run it back up again. But it has been, an effort in futility. This thing just hasn't made any sort of real progress. And when it finally did, it almost immediately failed and started to give it all back. So I think if you're still focused on this and looking for opportunity, you're going to have to be willing to just sit through the muck, right? And just hold on to through the chop. And that is not a very fun thing. It's not a very good trade opportunity, right? So we want to put our focus on Bitcoin products today, China ADRs. Solar's fine. There's some retail semiconductors, which semiconductors is part of the Bitcoin prey. So even communications tech, it's a rising tide lifting all boats. And if you're looking at everything that ran really hard yesterday and you're thinking that you missed out and that maybe you're going to buy it anyways, buying from the highs is not always a great idea, right? Sometimes you got to. Momentum, you have to buy high, sell higher. But momentum breakout plays aren't the same as trend trades. And if you're applying a trend trade to a momentum name, it's not normally going to work out too good. For the opportunities to day trade today, I think my focus is going to be on banks and maybe a little bit of Bitcoin stuff. Keep your eye on the clock. The news isn't bad today, right? It's just those big retail stuff. So be careful, be safe. We'll see you all tomorrow.